Hey, happy Monday, everybody. Paulo Brantz with This Week in Rates. It's going to be a big week, and I want to share something super important for you. When we look at where rates are at today, we've been here just a few times and got pushed back. However, if we can push through this level of resistance with interest rates, we could see some more rate improvement. Let me share with you exactly what I mean. So what you're looking at here is the actual, let me even make it bigger for you. Hang on one second. This is where mortgage bonds are traded. So just remember, as mortgage prices go up, interest rates improve. When mortgage bonds go down, that is, interest rates go up. So it's an indirect relationship. So right now we're looking at a 3-month here, and this is called a Fibonacci level. So this is a level of resistance that you can see that bonds over the past 3 months or so have tried to break through, but yet have failed to do. And here we are, we're testing it again. I want to share with you that if you go back a year for mortgage-backed securities, we're at the best point we've been, except for if you want to include this 1 second we had up here for interest rates. So interest rates are really good. Let's go back from a 2-year perspective. So we have to go back 2 years where we briefly here, let me see, that was September 2024. We briefly broke this Fibonacci level, popped above it, and then we slowly, and that's where a sell-off happened, where interest rates started to go up. So I don't know if this is going to happen again, but my job here is to share with you the information. So if you're thinking of refinancing and you're hoping for that better rate, if history is to repeat itself, you may be waiting, if you don't act sooner rather than later, you could be waiting another 2 years to get where rates are at today. However, rates could improve, but the rule typically is with bonds is that it's the exception to the rule. So there you have it. Let's get back to what we're here for, and that is a market update here. What is happening this week in interest rates? First thing, I do want to share that this Thursday, at 7 o'clock. I'm so excited about this. It's called Clear to Grow. Rebecca Jameson, she is a Priority One financial coaching. In fact, we're going to do a live tonight talking about the event that we're going to have on Thursday. It's at 7 o'clock. It's about family budgeting, the mindset behind it, it's so interesting how some families, that don't, there's like, I don't want to say 2 types of families, but my experience helping families, some people are just amazing savers. So let's learn at what they're doing and let's save. Here you are with today's interest rates. They still remain pretty much unchanged, as you saw the charts there with the bonds. Now, remember, I'm still showing it with 1 point, but I have to tell you, I'm an hour late for recording this video. I didn't even get to shave because we had about 3 contracts come in over the weekend and more people putting in offers this morning. So things are starting to pick up. Well, they have been picking up, especially with the rates where they are at. Speaking of rates, last week we talked about the legs that hold up good interest rates, and that's inflation, but it's also jobs. Last week was very interesting. We had a huge jobs report, which you would expect 30-year fixed rates to negatively react to it and actually go up. However, if you look at the history over these jobs reports over the last year, they are always revised downwards and nobody's believing them anymore. I mean, truly, it's about time. This has been like 3 or 4 years where the numbers come in high, then they get revised and the market settles. Now the market's saying, we're not believing it anymore. I want proof. So they're going to wait. They, being the bond market, is going to see what happens next month in this jobs report. But right now they're not taking the bait, which finally, right? Finally. All right. We're also talking about, we're introducing in this Monday update new programs. Last week, we talked about a doctor loan. So if you're a doctor or if someone that is a doctor, this is a great loan because you can go loan up to 2 million, 5%, little as 5% down, no MI. Huge win for doctors. This week, what came up for me last week is a misconception that you need a 2-year history. Now, the truth is you do need a 2-year history, but what constitutes a 2-year work history? So, for example, let's say you just graduated college with a marketing degree and you go and get a salary job in a marketing company. So, you've only been on the job for a month. Is that a 2 year history? The answer is yes. We can use your schooling as history and your job for the employment. So, those are the things that people don't know. Secondly, kind of piggybacking off this concept, you don't need 2 years in the same job. You just need a 2 year work history. So school can be used as work history. Let's see, any type of school that's like a trade school can be used as work history. So the point here is when in doubt, just ask. In fact, in the very end of this, I'm going to talk about a strategy session where we don't pull credit. We don't take applications. It's just me and you using my 20 years of experience, putting a plan in place for you. This week, things that could impact interest rates. Tomorrow, we have weekly employment data coming in, which could definitely impact interest rates. Case-Shiller and FHFA, although FHFA is not shown there, that is due tomorrow. That shows the values, appreciation levels in home prices. Wednesday is mortgage applications. I know that sounds so crazy, but mortgage applications is a huge indicator of how many people are entering the market. So if you're out there looking for houses and you want to forecast your future competition, that is what you want to be looking at, mortgage applications. Thursday is jobless claims. And Friday is producer price index, which is an inflation. These are all things that can move us above that Fibonacci level and give us some great territory, or they can keep us there or actually push us down. But if something changes, I will always update you this week as we progress. Last and certainly not least, if you are looking to buy a home, if you're entering the market, even if you're 24 months out or home buying is just a goal for you, this is something that you should really consider. A home buying strategy session. There's no applications, no credit pulls, no commitments, just pure strategy. Utilize me and my 20 years of experience, and let's put a great plan in place for you and your family to help you save money. All right, my friends, that's it. I hope you guys have an incredible week. I know I did. I have a little hat here. We just got back from Disneyland. That's another reason why I'm tired. Disneyland, the happiest place on earth. I think I walked 10,000 feet every second. So I think I walked a total of 20 miles over 2 days. So I'm tired. Anyways, Paulo Brands, Clear to Close Brokers. Hope you have a fabulous week and we'll talk soon.